what I'm essentially trying to say that you should not have a PhD degree in finance or economics to generate wealth from the market. What you basically need is a very disciplined and do a very boring job. When I say the boring job, that means every month on month or year after year, you should do the investments. And whenever the market goes. Hi, my name is Ashok and welcome to my channel Read to Expand. After my last video for asset allocation, where I have talked about the different asset classes, today I'm going to talk about why equity is important for your portfolio and for your overall wealth generation activity. But before we talk about the equity, let us understand that how depth has performed over a long period of time. So, guys, let's begin. All right. So, I have taken the data for the last 2 decades, as you can see in this graph. At one point of time, interest rate in India was as high as 13%, even before 1995 kind of a scenarios. But I have just taken the data for the last 2 decades to demonstrate that how the interest has gradually decreased over the years due to certain market conditions and the parameters in the RBI comfort level. As you can see that interest rates have been gradually falling, and in fact recently also that RBI has of course has increased the interest rates to contain the inflation, and the same has happened in US market. But I now personally believe that in fact RBI has paused the interest rates, and I personally believe that US Fed is also going to pause the interest rates from here onwards, and who knows, by the end of the year or maybe the first quarter of next year, the US Fed can also cut the interest rates, because the interest rates and the inflation is actually crossing if you see the graphs of the US market. But having said that, let's talk about India. What I'm trying to say that the interest rates has been gradually falling, and those days are gone that when you're going to get the fixed deposit rates of 10% or 11% kind of a scenario. So in this case, what is the option left for us in order to generate the wealth? And the only option where you can generate the wealth through the other asset classes such as equity. But let's see how the equity perform over a period of last 10 or 12 years. Okay. So, guys, let's first understand one thing very clearly, that every single investment comes with a certain risk. If somebody is saying that, I am investing in a safe asset, could be yes, but you need to understand the kind of return that safe asset is generating. Is it beating the inflation? If the answer is no, that means that is not a safe asset. That means from the day one, you are going downhill. Whereas if you take certain amount of risk to generate a certain amount of extra profit to beat the inflation, that's what matters a lot. And as you can see in this particular chart, I have done the comparison for the last 7 8 years of data, because this is the most recent data I wanted to highlight in this particular scenario. Okay, from 2013 to 2021, how the Nifty and FD rates have gone hand in hand, and how the Nifty has beaten the FD returns over a period of time. Yes, there is a risk involved into the investment into the stock market, but that risk can be managed if you extend your period of investment, let's say 5 years, 7 years, or 10 years. Okay, and that's the optimal way to generate the wealth. But let me tell you, the life does not go in a straight line. Neither the market goes up north direction always, or neither it goes south direction always. When I say north and south, means neither it goes up in a straight line, neither it comes down in a straight line. And that you can understand from this particular chart, which I have taken from, in fact, for the last 2 decades again. As you can see in this particular chart, that there's so many things has happened over a period of time. I still remember when the market has crossed, I don't know when the market has crossed 1000, because I was not even thinking about the market at one point of time, but I know precisely when this era of 2000 has started, and how that dot-com bubble has come into picture, how Mr. Manmohan Singh has become the Prime Minister of India, and how this Kargil war has happened, how this 9/11 has happened. So there are so many schemes. In fact, when I was in office, the Satyam scam has happened. So market does not go up in a straight line, neither it comes down in a straight line. But one thing what I want to highlight to all of you, that despite all the challenges, despite all the problems the Sensex has faced over a period of time, it has crossed a certain milestones over a period of time, and it has touched 60,000 today. So what I'm trying to say, if you can embrace the volatility of the market, and if you can sustain in that particular market, the wealth can be generated from the stock market always. Okay, so for the return purpose, and this is the actual data I have taken for the last 2 decades, because this decade had just started. We are in 2023 right now. You see the data for the last 2 decades, which went from 2000 till 2020, despite all ups and downs. When I say ups and downs, I mean to say dot-com bubble, Lehman Brothers collapse, COVID. Despite all this, the market has touched a certain milestone. The market has given you the compounded annual growth rate, what we call as a CAGR, has given you 13.12% kind of return on a CAGR basis. But has it happened in a linear north direction basis? Has gone down, it has gone up. In fact, I still remember when my first daughter has born, the market was corrected around 54% because of the Lehman Brothers collapse and because of certain whole host of other factors. But if you have persisted during that particular period, the next year the market has bounced back from there, right? Similarly, in the case of COVID, which is the very, very recent example, the market has corrected uh, certain percentage, okay, around 20-25%, and the market has corrected. In fact, I think around 30% market has corrected, but then see that how the market has bounced back and given you the kind of return, and market has moved from 40,000, 50,000 to 60,000 in I think 7 to 8 months. So what I'm trying to say basically is that stay invested in the market, go through the different cycles of the market. When I say the cycle of the market, I keep hearing sometimes interest rate phenomena will come into picture. Sometimes policy paralysis comes into picture. I still remember there was so much hoopla hulla about the GST implementation in our country. Then we talk about the demonetization. So there are so many factors which are actually beyond your control and about which we can't do anything about it. But what we can do about it basically is our the disciplined approach of investing. You should be, what I'm essentially trying to say, that you should not have a PhD degree in finance or economics to generate wealth from the market. What you basically need is a very disciplined and do a very boring job. When I say the boring job, that means every month on month or year after year, you should do the investments. And whenever the market goes down, okay, market always gives you the opportunity to make an entry into the market, because I have seen the market for the last 20 years. And let me tell you, market can correct any point of time, maybe 20%. And that is the time when you have to actually buy more rather than start panicking and thinking now is the time to sell. In fact, 95% of the people talks about, if the market goes down, they become panic and they start thinking about the sell. In fact, that's the time, we should do the more buying. It's like that, that the sale is going on 100 feet road in Ranagar, and basically, you can go and buy the top brands. They're 30% discount, 40% discount. Similar way, if the market goes down, you buy more rather than get panic about it. And believe me, if you can stay invested, these are the numbers are right in front of you, which I'm talking about, that every 5 years your money starts, double on the CAGR basis. So you need to take a very conscious choice and make the right decisions. But most importantly, please do not ignore the equity investment, because that's the only way in which through which you can generate the wealth and do the compounding of the wealth, not for yourself, but even for your next generation as well. All right. So to the slide I want to present you for your information purpose. According to the Chief Economic Advisor of India, India is going to be the third largest economy, or maybe the fourth largest economy by 2030, and our market cap around 7 trillion economy. Currently, the market cap is around 3.2 or 3.5 trillion, and by 2030, given a certain percentage, 10% here and there, India could be the 7 trillion economy. Okay. So now you can guess that how the market is going to behave in the coming days. Is it going to be the smooth ride? The answer is always no. It's always going to be the bumpy ride. But you should be prepared for the adventurous and bumpy ride if you want to make and create wealth for yourself. Okay. Also, people sometimes tells me that the market is at all time high. I still remember that market has 10,000, then I remember 21,000, then I remember the 40,000, now it's 60,000. And every time my response is always one thing. Yes, market has hit all time high, but market has hit all time high as on today. Where the market will be in the next 2 years or 3 years, or maybe 5 years down the line, the time will tell the story. Okay, so as a thumb rule, you should always have an equity in your portfolio. Depending upon the person age, risk-taking capabilities, the percentage of equity can vary, but you cannot ignore it completely. So remember the importance of gold in your portfolio. Both equity and gold move in a opposite direction. Whenever the economy is doing great, the equity will perform well. But whenever the economy is in downturn or not doing so great, so the gold will definitely is going to play the very very important role. It's considered as a hedge against the inflation. As I mentioned in my last video, that you should always have a different asset classes in a portfolio because they are going to perform differently at different market conditions. So you need to have the diversified portfolio. However, I would like to highlight that if you want to generate wealth and do the compounding, there is none other than equity as an asset class. So, with this, we come to an end of this video. Please do let me know your thoughts about the equity as an asset class. Okay, please do provide your comments into the comment section, and I will personally read all of them and share my thoughts as well. Also, let me know your one key learning from this video and do share your thoughts as well. If you like the content of this channel, please do subscribe to my channel and share with your friends and family. It might help them in some other way. Okay. Thank you very much for your time and stay safe, stay healthy, and I'll see you into the next video. Thank you. Thank you very much.